What if I told you there's a way to make money from oil and gas without drilling a single well, risking millions, or working those grueling 80-hour work weeks? See, most people think oil investing is for billionaires with massive capital. But today I'm sitting down with Jace Graham, a guy who has literally cracked the code to generating passive income from mineral rights that anyone can learn. See, in this episode, we're going to cover how to buy producing wells without operational headaches, the exact process to acquire mineral rights directly, and why family offices and private equity are flooding into this market, as well as a secret strategy you can use to earn mailbox money month after month. See, this just isn't another investment strategy. This could quite possibly be your blueprint to financial freedom. So if you want to learn how to turn energy assets into personal cash machines, you do not want to miss what's coming next. All this and more coming right now. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Jace Graham. Jace is the CEO and founder at Rising Phoenix Resources, a 60 million AUM group of companies that specializes in a wildly profitable corner of alternative assets that deal with oil, gas, and mineral rights. So what does this mean? Well, it means that Jace understands how to find, close, and exit winning energy assets, and he's about to teach you how it's done. So Jace, welcome to the show, man.
Hey, Ryan, I really appreciate it. Listen, been a big fan of the podcast, Making Billions. I mean, where were you 10 years ago? I mean, when I was starting off and trying to learn how to raise money and like how to structure a fund and all those types of things. And man, you really kind of done a great job of bringing on, excellent talent that in fund managers that know what they're talking about. So I really enjoyed kind of listening to several of the episodes and just honored to be on here talking about what I love, oil and gas minerals.
Oh man, that's where I cut my teeth. So I was probably just starting in oil and gas about 10 years ago. I'm not sure. Yeah, man. And it's super big honor to have you. We're in, top 2 or 3% in the world of all podcasts. So we're very fortunate to have amazing guests like you. So let's jump right into it, man. You buying mineral rights, oil and gas, it's a bit of a stretch, but this could be somewhat of a real estate play, but there's so many things that we have in here. So let's talk about when you're entering oil and gas, particularly in your sector, how do people get some early points on the boards?
Great question. So, I think it's first, let's kind of unpack kind of investing upstream in oil and gas, what that looks like and where you can invest. We're not talking about investing in oil and gas companies like ExxonMobil and Chevron through the stock market. We're talking actually investing upstream where the development occurs. So let's just say that there's three main ways to invest in oil and gas. You can be an operator. We're not going to talk about that. That's noisy. You got rigs, you got crews, you've got a ton of personnel. It's high risk, high reward. It just takes a lot of CapEx to get going. We're not going to go there. Okay. You have non-op working interest. So that is actually where you participate in the drilling of wells. You invest with operators. So you share on the costs. There's risk there. There's dry hole risk. I know that that's something that kind of comes up with investing in oil and gas, but you don't really control the, what goes on because the operator is the one kind of in the pole position. We're not going to talk about that either. Okay. We're going to talk about oil and gas minerals. Okay. It's nice and safe. That's where we play. You own the land. It is a real estate play, like you mentioned. So you own the minerals under the land. Okay, so when land is originally sold, it's the minerals are part of the bundles of sticks that go with the land rights, and so there's no OpEx, there's no CapEx, just monthly cash flow, man, and that's what we love. There's no dry hole risk, and kind of we're definitely going to step into that and go deep into kind of how that's done. But we really like this space upstream. It's nice cash flowing, safer investment strategy without the dry hole risk.
Yeah, and I grew up in oil and gas counties in Canada, and literally we did oil and gas accounting, and I'm literally going through my head of write-offs of dry hole expense. But what we really want to talk about here is cash flow, like you said. And so when it comes to that, and you're avoiding, so this is something I did not know, is I assume that you got to be involved in an operations of a well. And you're like, no, actually you don't. You can do that. That's a model. And sure, lots of people do that. There's a market for that. But what you just said earlier is, but that's really expensive. And you got to have hundreds of millions of dollars at depending on the well and the development to really develop at these sites. What you're saying is, well, there's an alternative where you can still benefit from that industry without all of the capex that comes with it. So this is the part, folks, that we're really going to dive into a lot more. So with that model that you said, how do people get early points on the board doing mineral rights? What would you say?
Yeah. So when we talk about the oil and gas mineral rights, Ryan, you nailed it right on the head. It's not operations. Okay. So we're buying the passive mineral and royalty stream that go with the mineral interest. All right. I grew up in and around operations. My father was a independent operator. So I got to see and learn from on the shoulder of a giant from an operation standpoint. Again, very noisy, very loud, a lot of risk. He'd always tell me, hey, son, if you drill 4 wells, one of them is going to be a dry hole, 2 of them are going to be marginal, and one of them is going to be great. And so I did several of those projects with him. And over time, I just kind of realized, and we did an oil and gas mineral play. And I said, this definitely where we want to kind of cut our teeth. But to kind of answer your question directly, there's two main ways that, an investor can come in and invest in oil and gas minerals. First way, they can just jump in. There's public auctions out there. Okay. We love to go to public auctions, and that's where we like to sell our mineral interest. Okay. So, those are out there. There's websites, Oil and Gas Clearinghouse is one, Energy Net's another, and you'll see a lot of just mineral and royalty deals that are on a public auction. Okay, definitely need to know how to underwrite those. We're going to unpack that in this podcast on how you underwrite oil and gas minerals and what you need in order to do that. There's no Zillow or MLS for this stuff, Ryan. I mean, you got to really understand what's going on there. It's not like a flat cap rate. There's decline analysis going on. There's reservoir pressures. There's, different operators or do different things. And of course you got commodity price swing, but auctions is definitely the easiest way anybody can do that. Okay. What we're going to talk about is how you can do it direct, bypass the middleman, bypass the auctions, and actually go direct to mineral owners. And Ryan, I was thinking about it. I don't think that this has ever been really explained to the general public. I mean, you can look online and say, how do I invest in oil and gas minerals, and try to get, there's no master class. There's no online course for this type of stuff. So, it's a little bit of, kind of understanding the industry. But I'm going to break it down into nice bite-sized steps on how to do this if this is something you want to do. But happy to unpack that and then jump right in.
So auctions are good. I assume there's markup every time it passes one organization, passes on another. Fees always go up. So I'm assuming you can go to an auction, kind of a done for you thing, sort of, but it requires a larger budget. Is that right?
Yes, kinda. In these auctions, I mean, there's deals that are trading, $5,000 type transactions all the way up to 50 million. Okay. So, it's not necessarily the size of the deal in these auctions. It's just that this is where guys like me, industry guys, go to sell to retail buyers that may not understand kind of the nature of how these assets are underwritten. And so we typically get the highest price on the auctions, quite frankly. So we like to go there to sell assets. It's a great place to sell. Probably not the best place to buy unless you really understand what you're looking at.
Understood. Okay. So then how do you bypass all that? That was super helpful. I didn't know that either. How do you bypass that and go direct? What would you say?
All right. So we're going to unpack this. This is going to be fun. I've never really explained this in detail, but we're going to go. Okay.
All right. Making billions first.
Yeah, making billions. I'm all about abundance mentality. So let's go full kimono. Let's pop the hood. Okay. So first, what we want to do is you want to find an area where there's activity. Where are the rigs right now? Where's the drilling? Where are the permits? Where are the operators going? You don't want to be buying and looking in areas that are, East Kansas or who knows where, right? So first, this is pretty basic stuff. Find where the rigs are. You can look online. Texas has a website where you can go and kind of look and see where activity's going. It's the Railroad Commission is kind of the government filing site in Texas. It's where we play most of the time, but we buy in every major basin in the lower 48 in the United States. But we want to kind of figure out where to buy first, kind of where do we want to kind of point our team to go after motivated mineral sellers. In order to do that, you're going to be pulling a little bit of data down, like I mentioned. So it's just kind of a high level scrub. Second, we need to kind of identify who are the mineral owners. How do we find a list of mineral owners? And just like whether it's a real estate deal, whether you're doing SFR, commercial real estate, or land deals, there's taxes that the property owner pays. And so you can track that back to the assessor, the tax assessor, and get a list of owners. And in this case, it's mineral owners. In Texas, they pay what's called ad valorem tax. It's basically like a property tax, but ad valorem tax. And you get a list of all the owners that are currently receiving royalty income from operators. Wells have already been drilled on their mineral interest, and they're receiving royalty income, and they get taxed on it. So we start there and we pull that list down, and we kind of work that list a little bit. We use I've got a guy up in the Northeast that's kind of an old school SQL database guy, lives in a cabin in the middle of nowhere. And he kind of goes in and kind of scrubs that list. I mean, you can find places online, whether that's through Fiverr or Upwork, they can also do this, but kind of get it in a manner that we can kind of work with it. Okay. From there, we're going to pin phone numbers. Okay. So this is heavy ground game cold calling, man. There's nothing sexy about it. All right. So we're going to get phone numbers appended. We run those also through a DNC list to make sure that, we're not, that we're TCPA compliant. That's a big thing right now. So definitely make sure that you're running your list through the DNC call list and litigator list and pulling out all those DNC numbers. And then we're loading these in and making phone calls. And our guys are, in-house team. And so you're out doing cold calling and just entertaining, see if people are interested in entertaining offers. We're also sending direct mail to those addresses that we got on those tax rolls, also doing the same thing. So we got kind of a two-prong approach. One's more offensive. The other's a little bit what we call defensive with the direct mail. So we're going out and just trying to just basically cast a big net, trying to gauge motivation. Our sales team is like trained in kind of the Jeremy Minor, NEPQ. I think it's like neuro, emotional persuasion, questioning sales strategy, which is kind of really jumping into the why and the motivation behind that. And so we work a really good sales process from soup to nuts. We're trying to provide value to these mineral owners. And so how we do that is we start providing evaluations to them. Would you like a valuation on your mineral interest? If so, we'd love to provide that to you. There's no cost whatsoever. And you can look at this and kind of get some information on how we underwrite and how we value your minerals. So once we start talking to these mineral owners, we get check stubs in. Okay. So that's the next piece of data that we get. So these royalty and mineral owners are getting check stubs from ExxonMobil, Chevron, you name it, Suncorp, you name it. And so we get that data, those check stubs. There's a lot of important information on there that our underwriting team looks at, from the different wells, the decimals of interest, the marketing deducts, the transportation. A lot of data on those check stubs. And so our team then, we've got virtual assistants in the Philippines, take those check stubs, load those into kind of a spreadsheet format so that my in-house petroleum engineer, Adam Lapucha, he's just a stud, can start underwriting these assets. He throws it into a petroleum engineering software called PhD Win. Okay. He went to college for this stuff. He understands how to underwrite these types of assets because it's a declining asset, right? It's not a flat cap rate. There's only so much oil and gas in the ground. And so he's doing that deep underwriting. That's a big, big, big component, whether you want to, do it through an auction or do it direct. You need to have some sort of a petroleum engineering understanding of what's going on, because that really kind of shows what we think the forecast is on the remaining production. So Adam will finish that underwriting and he'll get back and he'll kind of let our team know, hey, based on what I'm seeing this many producing wells. I'm seeing this much potential upside locations that haven't been drilled and developed based on surrounding development that's occurring. He can kind of forecast out what he thinks the value is of these minerals. So we then present that back to the mineral owner, and then we try to negotiate a price. So it's kind of a lump sum payout versus them getting those monthly checks. From that point, okay, I told you we're going to break this down, Ryan.
Let's keep going,
all the way
man.
Down to the gnat's eyelash, man. I'm popping the hood.
Yeah, I do have a question for you, and I appreciate that. So you mentioned you negotiate on price. Now that is something all fund managers, I assume, for the most part, unless you're a hedge fund. If you're a hedge fund, just plug your ears for this part. But for the rest of us who actually try to acquire assets or companies or whatever that is, there's some negotiation around price. How do you establish that? Do you read engineer reports, or how do you guys kind of get a range of what this thing is worth?
Well, we back everything back into like a present value, depending on where the cash flow is today. Okay. So if cash flow is current and we got producing wells, we typically pay PV10, PV12. Okay. 10% to 12% present value. So we haircut it a little bit right? So that if it just cash flows out, we're going to earn 10 to 12% on our money. The next bucket would be permitted wells that aren't producing, but there's permits and they will be producing. So we can kind of point to those. Those we typically pay PV 15 to PV 20. Okay. Because there's a further in time. And then upside locations were PV 30, PV 40. And so that's kind of how we formulate our offers out to these mineral owners. But a lot of times the mineral owners are only concerned about their current cash flow. They don't have all this understanding and deep understanding of what all this long-term upside. And we do everything we can to kind of demystify that process. And quite frankly, a lot of them don't really care. They understand that, hey, listen, I realize that I got all these reserves, but they're not paying today and I want the cash now. And so they'll take the lump sum payout and move on down the road.
Okay. So then where do we go from there?
Okay. So from there, so let's say we negotiate the deal and then they agree on it. We agree on a price. Next step is we're going to get a contract signed. Okay. Just like real estate. This is a real estate transaction at its basic, understanding. Okay. So, I have a real estate company and so these things just play just so easily across one another. So I don't want to really confuse it like minerals and royalties. But it's a real estate transaction. So we get a contract. Here's kind of the fun part. We start running title back to patent. Okay. On the asset. When I say patent, I'm talking about like when that president of that state deeded the first deed over to the first owner, probably in a log cabin in the middle of nowhere. We run the title, we chain the title all the way back to that. Okay. Because what we've got to do is we've got to see if that chain has been broken. Okay. Because you can sell your real estate, you can't sell your surface estate and reserve the minerals. Okay. And in areas that have been active since, say, the 30s, 40s, 50s, like the Permian Basin where we play in West Texas, there's been reservations made back as far as that long because there was value in those minerals. So now a lot of times that surface owner doesn't own those minerals underneath their land. Some guy in New York or a cousin in Florida or who knows where own those assets because it's kind of gone down through the family tree.
So that's what you're looking for then is when you look at title, you're trying to say, well, it's not just the land, but we want to make sure that the mineral rights are owned. And at no point during the legal recording of ownership of this land was mineral rights sold. And so we don't want to buy just the land. We want to buy mineral rights attached to that land. So that's why you go back that far is to make sure that the mineral rights, you are getting what you think you're getting.
Exactly. Title companies, that there's no title policy issued for this kind of stuff. You've got to run your own title, but we run it back. We use land teams. That's what I started out doing when I got into business, is chaining title in the courthouse. I mean, you're pulling these big old grantor, grantee indexes. I mean, this is before like the typewriter was around. I mean, you're seeing like where they were using a feather to like do these conveyance deeds back before 1900. It's a trip, but we're running that title. And then we have a title attorney who specializes in this stuff, basically look at all this information that the title team brought and makes any suggestions that he thinks, hey, let's fix this. Hey, let's get the family to sign an affidavit of heirship. Let's clean this up before we close on that asset. So that's a big piece that you got to pay attention to make sure that you're getting good title, because you can't always trust the operator that they've done it right, because they are paying that mineral owner and they're going to also run their own title before they put that well on. But we have to do our supporting backup to make sure that we agree as well. So that's a big piece. So that usually takes, we've got some deals moving as quick as 2 weeks, but I'm going to say on average, probably 30 days to kind of get that done. And then we move towards the closing. Yeah. Once we close that transaction, it's a conveyance deed. It's just like real estate, like a general warranty deed if you sold your house. Instead, it's a mineral and royalty deed, filed a record at the same county courthouse that you file your real estate transactions at. Okay. So then from there, we then send that to the operator. So in this case, maybe it was ExxonMobil who was paying Farmer Brown. Now he's paying Rising Phoenix, and we have to notify the operator that, hey, we bought these interests, stop paying him, start paying us. And so they look at that and then they send what's called a division order. Some operators are great to work with. Some take 60 days to get you in pay status. Some take you 180 days plus. Okay. It just kind of depends on the operator and their bandwidth, but they're going to get you into pay status. And then ultimately you're going to start getting royalty payments from that operator. So that was a lot from, looking at the areas of interest, kind of understanding what's going on, all the way to the underwriting, to the offer, to the sales part, the negotiation, to the title, to the talking to the operator, to getting the assets and pay status. But that's pretty much it. I mean, it's not rocket science, but definitely the devil's in the details.
So let's talk about the area. You mentioned that's a big part. You want to look at that. And I know this deals with downside risk. So the area, and by area, I don't mean the state as much as I do mean the basin that the state is on top of. So any of these energy basins, what's your opinion? Are there some that are better than others? How does that work? What are some good areas that you think, both from a basin standpoint, but also you're dealing with governments and records and, going through a process of transferring assets and buying them? Maybe round out a little bit of what you're seeing. Any advice on where to do this if you're just starting out?
Yeah, I mean, listen, the 900-pound gorilla is the Permian Basin. Permian Basin in West Texas generates more oil than Saudi Arabia. Okay, so it is a massive reservoir, multiple layers, meaning multiple zones, meaning you could produce oil and natural gas out of different zones at different depths. So it's the gift that keeps giving. So you can't go wrong in the Permian. Deal with the Permian, a lot of competition, right? All the private equity shops. I mean, a lot of them are just only focused in the Permian Basin. But there are some other areas. So the shale revolution, occurred kind of when I started and got going in this business around early 2000s, right? And so before that, everybody was drilling these conventional vertical wells into these little tight pockets. And that if they could hit it, that was great. But if they missed it by 100 yards, dry hole, another 100 yards, dry hole, back in the money, good to go. And so my dad made a career out of that. So not knocking that whatsoever. And there's still operators out there, usually smaller in nature, that are drilling what we call conventional reservoirs, where there's pockets of trapped oil and gas. What really opened it up is the shale play in the horizontal drilling, and I'm going to say a bad word, fracking.
The F word. So the F word, man. But without that, I mean, listen, we are energy independent because of it.
We no longer rely on foreign oil. We no longer rely on foreign gas. We are completely energy independent because of that. And there's just so much shale and the horizontal play into that. So imagine if you drill vertical into an area and then you stimulate that, you're only going to stimulate just right around that wellbore. But if you drill horizontally 2 miles through a reservoir, and then you stimulate that, you're breaking up all that rock, and the oil and natural gas is flowing freely back up. So it just really has opened it up. But it started out the Barnett Shale in my backyard in Fort Worth, Texas, just west of Dallas. That's where I cut my teeth on the mineral side. It was inside of Fort Worth. So I was young, but we bought 12,000 quarter acre lots under these town lots. Wouldn't do that again. But it was definitely a learning experience. But it migrated up into the Bakken Shale up in your neck of the woods, Ryan, and the Marcellus Shale in the Northeast is big. The Utica Shale in Ohio, Eagleford Shale in Texas is another one. The Haynesville Shale is in Texas and Louisiana, right there on the Gulf Coast, where a lot of these new LNG plants are being built, liquefied natural gas, where they're moving natural gas to these LNG plants, liquefying it, putting it on a tank or ship, and then sending it across the country, the world, I should say, to the biggest buyer. And so that's a big demand that's continuing to increase. And you can say what you want, but with the current administration, they are definitely pro on opening up the permitting of more of those types of facilities.
Excellent. So that being said, so we talked a lot about how to acquire your first land, some of the areas and the trade-offs, like Permian, gift that keeps on giving. If you can get in, it's a pretty crowded party over there. But that's pretty common. If there's money to be made, people will flood in to go capture it. Why not you? So I'd love to switch gears a little bit. That was absolute masterclass. And, a big part of doing business, especially in commodities, is the market. So I'm curious, what are you looking at right now as far as the market goes? What are you seeing out there?
Oil's been hovering around, let's just say $70 for the last four years or so. That's a great price for it. Okay. Operators can make money. The general population isn't complaining too much because gasoline is hovering around, call it $3 a gallon. And so it's a good place for oil to be. Now we know that oil can be volatile. It can go it got as high as $140 a barrel.
40. I remember that.
It got as low around COVID, around $20 a barrel. I know that there was discussions of, hey, oil went negative. That was the future strip. It never went negative in real time. It wasn't like me as a mineral owner, a passive mineral owner, owed the operator money. That would have been a trip. But hovering around $70 a barrel is a great place. I know we've got the current administration talking about drill, baby, drill. I don't think that's necessarily going to happen. These operators, these domestic operators they know what they're doing. I mean, they're after COVID, they really chewed up their balance sheets, got rid of as much debt as possible, started paying out the dividends and doing, what a good operating company should do. And just because the administration says drill, baby, drill doesn't mean they're just going to do that and just flood the market with supply thus dropping price. It may be silly. So the good news is it's just opening up all the, call it permitting and development restrictions that is just going to help kind of, maintain that price where we're at. But something crazy can go over in the Middle East. Okay. Prices could pop up. I don't see them really trending down too much in the foreseeable future. But definitely you got some upside on the oil if all hell breaks loose overseas. And natural gas is a different commodity that we track, right? We buy natural gas minerals. We also buy oil minerals, and some of these basins have a mixture of both. But natural gas is, in 2022, it was $8 an MCF. Last year, it went down to $2. Okay. And right now it's hovering around $4. So I think nat gas has got a lot of upside potential. Okay, so it's going to be hard for oil to go from $70 to $140, but nat gas can go from $4 to $8, $4 to $6, especially with all this exporting of LNG that's going on. And then the one that's kind of coming up within the last couple of years that was not on the radar 5 years ago when we were, when analysts were looking at, future demand of, say, natural gas is AI data centers and their massive thirst of electricity. And electricity, for those of you that may not be aware, is primarily made out of natural gas. Natural gas is converted into electricity. So a lot of new demand is coming online for the supply that's being developed.
Brilliant. And so a lot of demand. And then you mentioned earlier, how's the LNG? So we talked about LNG. Are you seeing it as far as getting, because there's infrastructure on the internal part, and then there's also ports, which are infrastructure, but those aren't the same, even though you're saying infrastructure's happening. But if we're seeing it in ports versus pipelines internally, that might tell us that we're getting ready for export. Are you seeing anything between internal versus the coast development with LNG?
Well, so these ports can be turned either direction. Okay. But the ones that are being permitted, and these are massive. These are huge projects. There's one that just got completed out of Louisiana. The whole project was literally 1 square mile. The whole thing. And
they're like a city.
It's huge. I think at one point in time, it had the most cranes, than any development in any place in the world. Okay. Down in Louisiana, building an LNG facility. So the ones that we're building in the United States are for exporting purposes. Listen, we've got a ton of natural gas here. I love it. I look at it as the energy source of tomorrow. We've got just so much of it. It's abundant. It's cheap. Okay. It's hard to compete with natural gas, especially on some of the other things that are a little greener, if you will. But natural gas is considered a green, because it burns clean. But it's hard for like solar and wind to really compete without the subsidies just because of the price point of natural gas. When natural gas goes up to $8 an MCF, $10 an MCF, then those other types of energy resources can make sense. But to go back to what you're saying, there's more and more countries that are kind of building the importing type facility infrastructure for natural gas coming, quite frankly, from the United States of America.
Brilliant. And where do you see the smart money going in the future, just from a market standpoint, just on your opinion?
The smart money. I mean, listen, I like, when prices are low. I like when everyone's running out of the fire, I'm running in. So when COVID hit, not saying that I'm wanting another COVID to hit whatsoever, but I mean, that was a phenomenal opportunity to buy. Right now we're hovering around. I think it's a great time to buy natural gas assets. Oil's been around $70, holding there. Nat gas is moved up to about 4. But it was around 2. We love buying it at 2, man. That was awesome. I buy as much as I can at 2. So I'm kind of watching natural gas. I think, keep an eye on that. It just has the ability to 2x that commodity price a lot easier than oil. And so that's what we're paying attention to. That's where we're, buying our own internal assets for the long haul is in natural gas. But however, I will say a lot, and I mean a lot of money, a lot of private equity backed money is chasing oil right now. I mean, it's the darling right now. It's primarily in the Permian Basin as well. You got other areas that they're looking at, but their oil is, I mean, we have no problem selling oil mineral deals out of the Permian Basin. But again, I like the long-term upside, buy it, park it, let it just sit there, because the serendipity that goes on with these assets and how they grow and drill additional wells on your acreage when you buy it one time. I mean, right. It's like if you were to invest in an apartment complex, a 1-story apartment complex. I know that sounds crazy, but, and you invested in that, and then they built a 2nd story and a 3rd story and a 4th story and maybe even a 5th story. You don't have to pay for any of those stories, but you get to benefit in the income that comes out of those. That's what kind of the fun part about owning oil and gas minerals long term, because of all the additional wells that these operators are figuring out how to get into your area that you own without any additional cost to you. That's why I love this space so much, because it's the one-time purchase of that asset, and then it's the ongoing benefit of the monthly royalty income. I mean, it's mailbox money, man.
Yeah, and it's already producing, so it's not like, so when most people think of oil and gas, you buy a piece of land and cross your fingers, put a big drill down into the ground, and hopefully you hit something valuable. But what you're saying is, why? Like that's quite expensive. Why don't you just buy the ones that already hit it? They're producing oil, and then instead of Farmer Dan or whatever you said, they pay me the royalty, because now, so all you're doing really, it sounds like, is you're just after the mineral rights. And that gives you the right to collect the oil royalties at the operators on that land. This is a brilliant model, man.
Yeah, it's great. You're taking the guesswork out. You're taking the dry hole risk out. That's a big, anytime you bring up, oil and gas investing at a cocktail party, people are like, oh, that's super risky and all that stuff. Yeah, there is a portion of that. And I've got no problem with that side of the business. In fact, I invest in those types of deals, and we do those types of deals. And there's massive tax write-offs for those types of deals. Oh yeah. This is different. This is it's known, the production is there. You have to understand how to underwrite it. So don't get me wrong there. Don't just take a look at it and just say, hey, I'm getting this $1,000 a month. I can offer, 40 times that monthly multiple, and I'm good to go, because you don't know where you're buying in that overall production decline life of that well. So you need to make sure you understand that part, because you can be buying something $1,000 today, and in 6 months it's $200 a month. So you got to be careful there. But there's people out there. There's consulting engineers, petroleum engineers, that can kind of help navigate you through those types of scenarios.
Brilliant. And so as we round third base, I'm just curious, brother. You've been doing this for a long time. I'm curious, from your perspective, what are, say, 2 or 3 unfair advantages in making money in this sector? What are 2 or 3 unfair advantages that you can share with our listeners today?
I mean, I wish I could give you like this sexy silver bullet that just comes in and makes it happen, all that kind of stuff. Man, it's hard work. It's good old fashioned ground game. It's like understanding your client. It's, we're teaching sales classes once a week. I mean, it's working a CRM. We do use some tech that helps, right? There's a company called Inveris that we utilize, was Drilling Info. It's not cheap, but it gives you information on where rigs are and what the formations are looking like and all that stuff to kind of give you an idea of what's going on. But I mean, listen, it's, we talk about, the ground game. And that's what's made us successful. That's what made my father successful, is rolling up your sleeves, looking at something that's got a ton of hair on it, finding the value. Rising Phoenix. I mean, that was what it's all about. The Phoenix rises from the ashes. So it's doable. Anybody can do it, but there is a process. There's a way to do this, a pipeline. But, like I said, I'd say, if you want to kind of step out into this world, I wouldn't do it alone. Try partnered up with somebody that's in the industry that knows what they're doing. We do deals with folks that are interested in, buying alongside us. We're typically $1 million above, and in that area. We also have our mineral funds where people can just, if they're like, man, there's a lot of work here. Let's just, give Jace our money, let him do his thing. We've got those funds as well that are a lot easier, and we just send out monthly check stubs to our investors.
Yeah. Okay. Make your money work harder than yourself, which is hard to do, but it's great when it does. So I love that. And, on this show and a lot of stuff that I do, we talk about raising capital from other funds, private investors, you name it, the whole spread, institutions, sovereign wealth, endowments. You get the idea. Is there any particular from a class of investor? Are there any particular kinds of investors that are really loving this asset class that you can kind of point our listeners to say, hey, if you want to raise capital and really scale this, nail it and scale it, these particular investors really like that. Is there anything like that you're seeing?
Yeah, we've always raised our capital high net worth, accredited investor. So we're 506 offerings, and we love that. We've got several very sophisticated oil and gas investors and families that have been in the business over generations that invest with us. So that's kind of the easiest where you can raise capital and kind of get people going. Family offices are really kind of starting to jump in and love this asset class. We've got a group that we work with out of New Mexico that kind of is. I mean, they are a family office. They've got a field named after them, quite frankly, in New Mexico. So they know what they're doing. So there's definitely family offices that like that cash flow. And then, of course, we got private equity coming in. They entered the market probably 10 years ago. It was not even it wasn't really even a known asset class. But now you're seeing some big shops coming in, Blackstone, Natural Gas Partners, Arch, several different groups, Fifth Street, that are coming in and loading these teams up with $200, $500, $1 billion in capital to deploy. And so there's definitely, if that's the space that you're in, I mean, there's definitely some room there. I mean, we just, we aggregate assets. We're not, this massive organization. We aggregate for our funds. And if it doesn't fit the buy box for our funds, we love flipping to private equity. They're not going to do the ground game. They're not going to, pick up the phone and make the cold calls and do all that stuff. They're just they want to pay a premium, and we're happy to deliver it at that.
Brilliant. Before we wrap things up, is there anything else that you would like? Final thoughts, ways people can reach out to you if they want to learn more, anything at all?
No, I mean, this has been fun. I mean, I love talking about this. Like I said, I grew up in and around the business, fourth generation guy. It's in our blood. In fact, we were down at an oil and gas conference in Houston a few weeks ago, and I had my boys, Jet and Bo, 8 and 11 years old, down at the conference at our booth, and they were learning how to pitch. So it's great. I love this industry. It's so resilient. There's so many ways to kind of get in it and make money. But I hope that, kind of popping the hood and demystifying, how you can actually go out and buy a mineral interest direct. There is the auction route. Obviously, you can invest alongside us or invest with us. We welcome that opportunity. But I would say if you wanted to reach out, learn more, I'm on LinkedIn, Jace, Jace Graham. You can DM me minerals. And I've got a little, how to evaluate minerals in 5 steps that I can send your way. We got a current fund in play right now called La Plata Peak, LAPLATA Peak Fund.com. So there's a few ways to reach out, learn more about this asset class.
Yeah, and in that DM, mention making billions. So Jace knows where you heard about it under it. So you're already qualified if you've listened to what his opinions are on here. So. Just to summarize everything that we talked about, PE loves this asset class. There's a lot of investors. You're literally just acquiring paperwork, mineral rights, and then you shift who gets the rights to the cash flow from the guy actually producing oil. So, instant cash flow, already buying, producing, cash flowing wells. The second thing is leverage tech to gain that unfair advantage, like Enverus, ENVERUS. It's a little pricey, you said, probably 40 to 150,000. And then, honestly, from what he mentioned was don't do your first deal alone, man. Work with a mentor or just a pro who knows this business. You do these things, you too will be well on your way, your pursuit of making billions.